Hello everyone and welcome to today's major markets update for Wednesday, March 9. And what if the top is in? Several, if not many of you have already asked me this question. And over the last week and a half, I was really focused on the short term. And I think now that that has kind of wrapped itself up a little bit, we don't want to stay too focused on it for too long. It is time to ask this question. We need to have a bull count and a bear count. So now that the wave 4 of 3 of 5 is off the table and that we're only looking at this being wave 4 of 5, so major 4 of primary 5, of cycle 5 of super cycle 3, the question is, what if supercycle 3 has already topped? It's not my preferred view, but I know the price levels to look at to know where I will be wrong. As I always say, I am wrong till proven right, and so is everybody else in the market. We are all students of the market. We are simply fleas in the fur of this beast that moves along in time and price, and all we do is anticipate, we monitor, and adjust. Just like in March 2020, maybe February 2020, I was looking for about 15% correction, and we got a about 35% correction. So I was looking correctly lower, but what we got was entirely different. So I was wrong in the sense that that was not a wave 4 and a wave 5 that I was looking for, but we got a C wave, and I can do a whole webcast about why that assessment was wrong, and there is quite an interesting story behind it. Long story short, what if the top is in? Okay, it's not my preferred view, but we have to consider it. The first thing we need to consider is, why is this possible? Because with the wave count I've shown here, the German DAX is not collaborating. Okay, the German DAX has already overlapped with a possible wave 1. Now my wave count here can be wrong in that this is not wave 1, but wave 1 was all the way back here in April, 1, 2, 3, 4, 5. Okay, again, Elliott wave is an interpretation of the price action, and it's wrong till proven right. It's a continuous work in progress of anticipating, monitoring, and adjusting. Otherwise, this looks like the initiation of a crash. We don't see this at all in the US indexes. I think the US indexes are in the last market of resorts, so to say, and that one will fall the last, and the European indexes are already succumbing to the selling pressure. So my preferred wave count is as shown here, that we have completed major 3, now a major 4, and then a major 5. This is the monthly time frame, and look how oversold the month is already getting. Okay, as you can see here, when we get this oversold, it often leads to fantastic long-term rallies. But oversold can always get more oversold, and it can be the initiation move of a cycle 4. So far, again, we're bottoming right where we should, in my humble opinion, for this wave 4, but let's assume and play devil's advocate. What I find funny, though, when I finally decide to hold this long-term forecast, the markets rally quite significantly for the day. But one day doesn't make a summer, so we have to consider that it could be just a one-day rally. So here is then a adjusted wave count. You can see the slight difference. Instead of 3, 4, I place the 4 label here, and then we have a 1, 2, and then 3, 4, etc. Okay, and then we have topped, and we have so far retraced exactly 23.6% of the entire rally that started in 2002. This whole rally so far, 23.6% has been retraced. So it's not a doozy. Okay, this is quite significant. What does this tell me? That this is then potentially the beginning of the cycle 4 wave. Okay, I would then potentially label it like this. This is then wave A, probably the major degree, okay, because this is going to last a long time, something like this, wave A. So this was then the initiation wave, like that. Then we got wave B, something like that, and we just adjust it and something like that, right? We're going to stair step our way higher, however it wants to go. This is going to be a long affair, probably about 6-7 years. So this would then be wave A, this would then be wave B, something like that, like this, wave B. So also this one Seems to suggest we're at the starting gates of a rally. And then this is wave C. This is then primary A. Okay, so we can get an idea. Again, this is not my preferred view, but I'll change my tune once we start to go too low. And then we are prepared. Forewarned is forearmed. Of course, this is going to subdivide as well, but you kind of get the idea here. Something like this can be a flat, who knows? Can be a triangle, and then we get this C wave here. I don't think we're going to go much below the 2019, 2020 lows. That's strong support. So this is what I prefer. We cannot go, of course, below the 2000 to 2001 top, whatever exact year it was. Something like this. All right, this is my preferred view then if we have topped. So we should be close to completion of this wave A, can always go a little bit lower, can even go all the way to the 38.2%, but let's just assume standard stuff, okay? All we know is standard stuff. How would that then look shorter term? Again, then the September high and low, as I showed you here, September high and low is then wave 3, wave 4, and we have a subdividing wave 5, as shown here. This label is a little bit wrong. This is 1 and this is 2, and this is then 2. And then we have completed super cycle or cycle 3. I have a label, sorry, this should be cycle 3, not super cycle 3. NASDAQ and NASDAQ 100 are, in my humble opinion, slightly different, bigger picture wave count. Okay, so there we go, cycle 3. So we start off then with an A wave, which will likely be, in this case, 5 waves. We might get a zigzag wave A, B, C. That would be A, then wave B, a massive rally, and then our final decline. So this would suggest we have just completed intermediate 3. We're going to bounce here for intermediate 4 and then intermediate 5 down here to 12,000 ideally, and that should then complete major A, and then we get the bounce for major B, as I showed you here, major C. Okay, it is possible. Again, it is possible. Nothing is impossible. Is it probable? Not sure yet, but we have a mountain to climb for the bulls before we can declare victory. I do want to point out is we have tremendous positive divergences going on, and now the bulls need to capitalize on this. Okay, so here's then the S&P 500. This is my preferred wave count long term. We have wave 3 here, which then was followed by wave 4, and it was a double zigzag wave B. As you can see, with a 5 wave C or Y wave, and then 1, 2, 1, 2, 1, 2, 3, 4, 3, 4, 3, 4, 3. Now a 4, again, market is right here in this ideal target zone that I've had for I don't know how long, so to say, and then the rally. So this still fits very well the decline. If we go below 4,000, I will get worried that we are going too deep for this wave 4. And then this option is being presented that we have wave 1, wave 2, 1, 2, etc. Okay, and then we topped right here at about 176.4% extension, which is quite typical for a 5th wave. So we must acknowledge that. Now, how we got there is quite weird because this doesn't look like an impulse to me, but maybe it is a diagonal. The whole weekly time frame just doesn't look very nice as an impulse, but it is what it is in that case. And again, if we go below 4,000, I will start to get concerned that this is indeed the case. Again, we'll be very early in our warning that we have topped for this 80% decline. What worries me for the bears is that everybody is bearish right now, the market. There is nobody on FinTwit except 1 or 2 that are bullish. A few Elliott waivers and a few fundamentalists, and everybody is bearish. And I cannot recall that everybody is bearish this close to an all-time high in both price and time. People get bearish once the crash starts, not before. There should be utter complacency. Maybe I'm wrong, but I find it weird that after a 13% decline on a closing basis, everybody thinks it's Armageddon and the end of the world. We haven't even started yet, right? We haven't even started, if this is the case, this wave. This is the true value destructing wave. We haven't even started the C wave of the A wave. So But maybe I'm wrong. Again, I could be wrong. I just find it weird. We're here and everybody is already forecasting we're going here. It's possible, but most of the time the majority is wrong. That's the way the market works. But maybe this time the majority is right. Who knows? So it is possible to count it that way. Fits with the Elliott waves, FIB extensions. So caution is advised. We have lots of negative divergences going on. So it does possibly fit. Again, where is then the market going to go? Oh, sorry, wrong chart. We should fall back anywhere between 2,400 and I would say 1,600. I don't think we're going to go all the way to 1,000. I think that's going to be a little bit too much. So somewhere here. Okay, this is where I expect this. Now in red here, you can see the Fibonacci retracements of the entire super cycle 3. Okay, that started in the 1930s. So this shows you that we potentially have a lot further to fall. The 23.6% retrace is at around 3,600. So then we get something again, like I showed you for the NASDAQ, okay? Something like this, very simple, can become a flat, who knows? Way too little price information, okay? And then we've pretty much retrace all of these fifth waves that we've had so far. And that will be a quite devastating drop. If we go to 2000, it would be a 50 to 60% haircut. Again, I was looking for S&P 6000, ideally late 2022. That remains on the chart, still remains my preferred view until proven otherwise. So how then for the Dow Jones? Well, the Dow Jones is indeed in its primary 5 of cycle 5 of super cycle 3 target zone. I'd like to really see 41,200. Okay, we're not there yet. We're getting close. We did break above the trend line. So let's zoom in a little bit. Okay, let's zoom in a little bit here. See how this looks. So we're right here at this long-term trend line that has held price in check. So we went a little too far too fast, okay? Super cycle 4 should then bottom somewhere around 7,000 to 13,000. I know it's a huge range, but there's way too little price information available to make it any more accurate than this. How will super cycle 4, if it's already underway, transpire? Well, super cycle 2 was a zigzag. So super cycle 4 will become a flat or a triangle. Rule of alternation, okay? So that looks then great. And you can see here that if we fall back just to the upper side of the retrace level, how that coincides with about 2,000 or 2,200 on the S&P 500. Again, it's still really early games. None of the price levels that I'm looking at on any index has been invalidated to suggest this is the case, but forewarned is forearmed, and it could fit. We are in the target zone for this primary 5 of cycle 5 of super cycle 3. Again, if we're going to get flat type of corrections, it's going to be quite the spectacle. Down, massively up, down, massively up. That's probably the right assumption to make for this super cycle 4, and then super cycle 5 eventually. This is not correct in time. A super cycle 5 will not last 5 years. It will last, in my humble opinion, many years. But then we eventually go to about 250,000 on the Dow Jones, believe it or not. That would be a nice 300% extension. Semiconductors. Also here, semiconductors, cycle 3 or super cycle 3, potato a bit. We should just drop a little bit lower on a super cycle wave versus cycle wave. Let's not get greedy on the short side of things. My preferred view is still for a 3, 4, 5. We've bottomed so far exactly in this wave 4 target zone, just as we did here in early 2021. So I'm not too concerned here yet, but I know my price levels to watch. Okay, we can even fall back to 2850. It's quite okay. It wouldn't really be too much of a stretch. And then we'll see if it's cycle 3, cycle 4. You can see the difference in downside targets, okay? I don't want to see cycle 4 drop all the way to 1200, then we'll have overlap, of course, with cycle 1. So again, I don't know if it's cycle 3, cycle 4, cycle 5, cycle 1, cycle, don't know. We'll let it play out. Don't get too worried about it. How would it resolve itself on a shorter time frame? We have wave 4 here in March 2020, and here we have 1, 2, 3, 4, and 5. Now, what already pops out is that we topped at the 161.8% extension, if this is a wave 5 or 5 or 5. That's a little odd because that's normally reserved for third waves. That's why I think we are in a third wave and not in a fifth wave. But Elliott wave count-wise, it is possible to count it this way. So FIBs be damned, we have to listen to price. Okay, so how is this going to develop? We'll probably soon complete wave A. Note that it is possible to see 5 waves lower, but 5 waves lower can be that of A, B, C. All right, which is my preferred view, that we are in a expanded irregular flat, which I show you constantly on the daily time frame. But if it's going to be morphed into something else, then we should soon complete wave B. A, sorry, 5 waves lower, wave A, and then wave B. Where should wave B top? Well, anywhere between 34.45 to about 3,800. Don't know yet, way too little price information. Let's assume right in the middle at 35.63. And then we should see a nice Fibonacci relationship between wave C and wave A between 25.55 and 1938, somewhere around there. So probably a retrace all the way back to the September lows. That will then complete A. Okay, and then we go back again for wave B, because then we have a 3-wave decline, A, B, C, which suggests a flat. Okay, that's a zigzag. And then we get a B wave, which even can make new all-time highs and maybe go all the way to 4,400. Okay, don't be surprised if that's the case. This is not accurate in time. And then we get wave C for the destruction wave. C is for collapse or crash, whatever you want to call it. So that would then be A, B, C. Okay, so A, B, C. A is going to subdivide into 3 waves. B is going to subdivide into 3 waves, etc. Now, if you think corrections are going to be as easy to trade as uptrends, well, my dear friends, let's have a look at this one. Okay, real quick. Sorry. This was gold. We can expect something like this over several years. Okay, untradeable. Just be prepared, that might happen. A, B, C, and then 5 waves lower. Very possible. Again, the odd to see a 5th wave top at 161.8, but doesn't have to. I can make it fit. It's not preferred. Same here for the IWM. It topped at the 161.8% extension, the 3rd of the 3rd wave, the 4th of the 3rd wave, everything topped and bottomed where even the 5th wave where it had to. So it's a little odd to expect that is all of wave 5. We have certainly a deeper wave 4 than anticipated, but so far we're still within the ideal wave 4 target zone. If we drop below 180, I'll start changing my tune. Okay, then something else has happened and we have some very odd type of top here that doesn't really adhere to the ideal standard Fibonacci pattern, but market doesn't owe us anything. And that's when I really start to question if we have not already topped. Here are some other indexes that, in my humble opinion, argue for another 5th wave higher, which is the equal weighted S&P 500 index. So far, we have just retraced normal percentages for a either major 4 or primary 4. Nothing out of the ordinary just yet. Down about 12%. What's the big deal? Honestly, right? From this perspective, what's the big deal? I know every storm starts with one snowflake, but what's the big deal so far? I tweeted that today as well. We've down 13% on a closing basis on the S&P 500. We now have double positive divergence. Just as you can see here, we're starting to diverge tremendously. So bears beware. Divergence only, divergence still is not. Don't hang your head on it. But again, after a 12, 13% decline, I know tech has declined more. Do we really have to be already this bearish? It happens quite normally to have such a decline once a year. So again, fits with a normal 4th wave, nothing out of the ordinary just yet. But we'll keep an open mind and we remain vigilant, and we know the price levels to watch that I went over with you. So again, the German DAX is definitely giving us warning signals. Okay, but the German DAX is not the US. We can't go out of 2. The NASDAQ so far bottomed where I thought wave 4 would bottom. Nothing out of the ordinary just yet. If we're out of the ordinary, then this is the price pattern to watch going forward. Very crude, very rough. I showed you gold, how complex things can get. So don't hang your head up on this. This is going to be a tough nut to crack, but we should see 3 waves lower, 3 waves up, 5 waves lower. I assume it's going to be a flat. This is then the shorter term count, 1, 2, and then we just bottomed here for wave 3. We should see a 4 and then a 5 to complete wave A. So that's going to be A, and then we're going to get a wave B and then a wave C. Why? Because then we have, I have it here a little bit different, but this is also A, close, and then we have a wave B and a C. Okay, 5, 3, 5. So that makes sense. 5, 3, 5. Okay, I like it. S&P 500 recap still looks better for a 3rd wave top and a 4th wave. We're still in the target zone for a wave 4. Below 4,000, I start to question this, and then we might have to adjust the wave count to this. Remember, it is an interpretation of the price action to the best of my extent and knowledge. But if I'm wrong, then we have here our alternative, and that is going to be below 4,000, where I start to question the 1 leg higher to go. If it's a super cycle 3, we should eventually drop here for probably primary A at around 3,600, a rally, and then skadoosh, so to say. We'll see. This is really far out thinking. It's really just trying to force fit a few waves into a very large, potentially complex pattern. The Dow Jones is so far topping out in the ideal wave 5 of 3 target zone, and should then drop back to about 13,000 or 7,000, with I think the upper side preferred, and then a wave 5 of in super cycle degree that's going to last many decades. Semiconductors, same deal. I still think we have a 4 and 5 with a 4 potentially close to completion. If not, then we have a little bit of an odd wave 5 of 5 top at 161.8% extension. We should see a drop here in 3 waves with the initial 5 waves lower complete, and then down to here the target zone, and then another 3 waves back up that might become irregular and actually target the 200% extension. So where would that be? So then maybe if the 5th wave doesn't do the trick, or the 3rd wave, whatever it is, the impulse doesn't do the trick, the B wave can do the trick, and then we can still have a B wave that can go all the way here to about 4,400. Then we simply have an irregular flat. All right, it's possible. Don't know just yet. Way too little price information. It's just making an assumption based on known price patterns. IWM has so far topped everywhere it should for the 3rd, the 4th, and the 5th wave of wave 3. So far bottoming exactly where it should on the 4th wave or C wave of wave 4. So nothing out of the ordinary. If we go below 180, I'll get concerned, and then I'll suggest that the top is indeed in, and that we can revisit the, I would say probably about 120 to 100 level. Some of the small caps also suggest still a wave higher, but again, we should drop below about 5,400 to start to suggest this is not the case. Again, small caps merely a 10% correction. So nothing yet to become too bearish for these indexes, but we have now our parameters in place. We know how the big decline is going to look like. Even in bear markets, there will be big rallies, especially in 4th waves that are going to be complex with a lot of counter trend rallies. So for now, that is really what I'm looking for, and we'll see how it transpires. And I knew that as soon as I show you the bearish count, the markets will be up at least for a day. So we'll see how everything's going to unfold. And with that, thank you so much for listening. Thank you so much for being a Valued Premium member. Take care, trade safe, and I'll see you all on Friday when I will review the breadth indicators, a little bit the short to intermediate term, go back to the usual charts. All right, take care. See you all on Friday. Bye.